The AI has performed decent so far in 2024, but has faced some headwinds from the narrow market leadership of large benchmark weight mega-cap tech stocks, higher for longer interest rates, and some crowding out effect of robust AI infrastructure spending on software stocks. Unlike prior innovation cycles when nimble upstarts disrupted larger incumbents, this time the technology giants were the initial beneficiaries. These tech giants have more resources, unique data sources, and large infrastructure capabilities to train large language models and are capturing the early opportunities with generative AI. Demand is broadening to other areas like next-generation networking, storage, and data center power infrastructure to support this explosive growth in new AI workloads. However, many of these new application use cases are still in the pilot development phase and are not yet being monetized or contributing to profits. Coupled with higher for longer interest rates so far in 2024, there has been a greater dispersion in stock performance between infrastructure, software and applications, and other sectors year to date. Over the next year, we do expect to see more AI applications move from pilots to deployment and for more AI use cases and monetization to be more visible to investors, which should help broaden the performance beyond just infrastructure stocks. As the Fed looks on a path to start lowering interest rates later this year and several times in 2025, lower rates and easier financial conditions should translate to better access to capital and increased investments in high return on investment projects. Earnings growth also looks poised to reaccelerate across more sectors, which should be supportive of a broadening of the market across sectors and market capitalization. The ongoing developments around generative AI and large language models have driven a much stronger demand backdrop for AI infrastructure so far, causing some supply constraints as hyperscale cloud platforms invest heavily to meet the growing demand from corporations and governments around the globe. In AI infrastructure, the developments around generative AI and LLMs further demonstrate that the demand backdrop for AI infrastructure companies should remain strong given the computing requirements for training complex AI models. More companies are now motivated to build their own domain-specific generative AI capabilities through continuous training and refinement. Investment also appears to be expanding to smaller cloud providers, governments, and corporations in more countries around the world, which should be supportive of the ongoing build-out of critical AI infrastructure in the coming years. In AI applications, a new wave of AI applications is emerging that infuse generative AI capabilities into the software to drive greater value and create more monetization opportunities. Many internet and software companies have a wealth of proprietary data sets and workflows to train AI models that can result in a new era of more intelligent applications and systems, opening up many new opportunities for monetization and value. In AI-enabled industries, AI is helping to reinvent digital transformation, introducing new generative AI possibilities that can significantly boost productivity and reduce cost. Many companies in AI-enabled industries are increasing investments in generative AI to train one's own industry-specific model on its proprietary content or knowledge to compete better and innovate in the future. We believe this is just the tip of the iceberg as more companies become comfortable with AI's potential to drive greater efficiencies and automation across every part of their business. AI infrastructure and generative AI tools like ChatGPT have made headlines over the last year. So far, this initial phase of AI has only benefited a handful of stocks. The next wave of AI breakthroughs should broaden the opportunity to other companies in the ecosystem. This initial AI infrastructure build-out lays the critical foundation for more digital disruption as companies across industries leverage generative AI's capabilities. The next phase of generative AI adoption and growth should benefit a broader ecosystem, including AI applications and AI-enabled industries over the coming years. AI's impact on every industry is starting to take hold, and we see a growing opportunity set beyond just the Magnificent Seven and technology sector. ChatGPT and early use cases of generative AI have proven that these breakthroughs can greatly improve efficiency and drive a new wave of automation. We are likely at the dawn of a long-term investment cycle that will have significant growth implications across the value chain and in every sector of the economy. Longer term, more use of AI in trading and risk management areas potentially, but we don't think AI can replace the core fundamental research process, since a lot of fundamental research deals with human interaction with executives, younger companies without a long history of financials, imperfect information, and constant change and disruption. We continue to believe we are at the very early stages of massive disruptive change brought about by the advances in and the development of AI. We believe these changes will drive meaningful growth for companies that can take advantage and drive disruption within their respective industries. Our view is that the compounding effect from AI disruption will create massive opportunities for innovative companies across every sector. Stock picking will be essential to capturing the benefits of this opportunity, especially in an environment characterized by disruption and change. Compared to the technology innovation ahead of us, humanity is still on day one of our journey through the AI revolution, with the aim of capturing the multitude of AI technologies and beneficiaries. AI has the potential to disrupt and transform every industry, not just tech, for decades to come. We invest across all market caps and sectors around the globe. Bottom-up fundamental research and thematic trend analysis to identify those innovative companies developing or leveraging AI technologies that are best positioned to grow. We are seeing a new wave of AI applications emerge that infuse generative AI capabilities into their software to drive greater value and automation opportunities. Many companies in AI-enabled industries are also increasing investments in generative AI to train one's own industry-specific model on its proprietary data or knowledge to compete better and innovate in the future. The market is taking a wait-and-see approach to valuing generative AI benefits across the broader ecosystem at the moment. We expect more clarity on the impact in the coming year as we see new applications and use cases with each generation of better AI chips and as these AI models get smarter. Market breadth continues to be relatively narrow, and many parts of the market are now pricing in higher for longer interest rates and risk of slower economic growth in certain industries. The lag effect of higher interest rates is beginning to have its intended effects to slow growth and inflation and has weighed on some sectors more than others. We do think that most of the impact from fewer rate cuts are now priced into the market, and the Fed is on a path to lowering interest rates later this year and several times in 2025, which should help the performance of mid and small cap stocks and breadth in the market.